Hey everybody, welcome back to another webinar session, and I'm so glad that you're here. I'm excited to be here with Eightcap. They have me on obviously as the guest analyst for the month, and I see a bunch of you guys are already in the chat and ready. So thanks for being on time and thanks for being here with me. What we're going to do here on these Wednesday sessions for the month is we're going to focus a little bit more on education, as well as trying to follow up on some of the ideas that we laid out in the Monday session. So if you were here with us Monday, we talked about how this week is a very big week for the dollar, a big week for the Federal Reserve, a big week for CPI numbers in the US. It's a lot of attention focused on these events. Now, I will get into all that stuff, and we're going to cover a little bit about that. I want to also remind you guys, if you have questions, we do have the setup a little bit better, and I'd like to just say hello to a couple people in the chat. I see Samuel here, Taryn, Jay, and several others of you guys. Thank you for being here, and happy to have you in the call. If you guys have questions, I am still getting used to GoToWebinar, but we're going to do it together and figure it out. So I wanted to start actually just by taking a look at the pound, which had a little bit of a spike here this morning, a little bit of a rebound. Basically, this morning we had just a little bit of a give back on some of the dollar crosses, and I think that it's especially interesting with all the loaded news that we have coming in today. Now, again, what we have in terms of news today specifically is at 2 p.m. US Eastern, which is a little bit later if you're in the UK, is of course the FOMC meeting. Now I'll show you guys this real quick. forexfactory.com. We can just take a look at what's on the docket for today. So we had numbers this morning at 2 a.m. my time. I was not awake, but at 2 a.m. my time we had GDP numbers come out for the UK, which were a miss. And of course the initial reaction, of course, with the pound was some volatility, but overall the pound actually has sort of rallied back since. Despite its overall decline in the last several months. The pound is, of course, an interesting spot to start with today's loaded sessions of news. Now, here's the thing. The pound rallied, but we have to understand the context. The Federal Reserve is very insistent on raising interest rates in the United States to combat inflation. In fact, they're doing so at a very fast pace relative to a lot of the other central banks around the world. That, of course, is putting a lot of pressure on assets like the pound and causing a lot of strength to the dollar. So for me, if you're staying true to the theme of this month, I'm a trend follower, right? I'm looking to go with the flow until the flow sort of is no mo, if you will, right? So when I look at the pound, I'm looking for basically sell setups in rallies, right? So if we get some volatility here going into FOMC, I would actually look at it as a possible opportunity to try and get short on something like the pound USD. Now this is a daily chart, so this is a little bit higher time frame, but what we're looking at here is this idea of trend continuation. So if I apply just a couple moving averages, you can see the idea, right? Strong overall downward pressure on the pound as the UK has just sort of been left behind in this race for central bank interest rate hikes and combating inflation with the energy crisis in the UK as well as Europe. It's been a really tough year for the pound. So for me, until that sort of changes, I'm looking for overall the trend to continue to the downside. Now, what I have talked about several times in our sessions so far is essentially I like to look for pullbacks in the trend, but on top of that, I will oftentimes take more than one attempt to do so. So let's say I want to sell the pound. I'm not only going to wait for this setup, because I might actually be able to find something more intraday that still suits what I'm looking for, which is overall a downward trend. So if I draw in our 1 hour chart here for a second, I'll show you guys what I'm thinking. So we're looking at the pound. We had a little bit of a pop here, and we had weaker GDP numbers, as well as, like I said, an overall very hawkish Federal Reserve. So looking at maybe like the 2 hour or 4 hour chart, what we can see here is that we've got an initial reaction from this strong sell point right around 1.15, give or take. Now, looking at the pound this week, we've started to see a little bit of a rally. And in my opinion, if we start getting a move on up to perhaps like the 50% retracement, this still could be an opportunity to try and pick up the pound on the short side. So for example, let's say that the pound starts rallying and we get a move up to the 50% retracement. I would be interested in possibly trying to catch some of that continuation. And again, you might get this more quickly than we're thinking with the Federal Reserve meeting later this afternoon. We could certainly see some volatility in terms of the pound USD as well as several other of the USD crosses. Now, in my book, like I said, price comes up to this area. I would probably want to put stops just above that 61.8. Give me a little bit of room on the stop just in case, things do spike around. I'd like to try and stay in the trade, but it's staying true to our theme here, which we talked about pretty much this whole month so far, is I will oftentimes take more than one attempt to try and buy or sell something. So if I'm sell biased on the pound, I might actually try and catch that level if it comes back into play again. In fact, putting a stop above here, this still looks like a great trade in the context of the overall downward trend, right? Now, of course, with everything trading, it's all about probabilities. There's no certainties, and if you stick around and watch enough of my content, then you'll know that what I tend to focus on is all about probabilistic trading. There is no certainty that this trade is going to be a grand slam or that this trade is going to be a grand slam. There's the distinct possibility that both of these trades could even be losses. But it's all about showing up, executing, and taking the trades that we're supposed to take. And for me, that, according to my plan, would be two setups on the pound dollar that look pretty strong to me based on the overall downward trend, as well as one other thing that I think is worth noting, some of the stats that we look at with the pound dollar, notably pointing towards a sell bias. So I'll show you guys this. If we take a look at the pound dollar edge finder scan, we can see we have a -7 score. All this does is it basically calculates all these different categories: the commitment of traders data, retail sentiment, seasonality, GDP, inflation, unemployment, interest rates. It takes all these things into account and punches out metrics for each one, or scores for each one. So if we take a look at the pound USD, what you'll notice is that from a COT data standpoint, you can take a look right here. If we take a look at the commitment of traders report numbers, we have 77.71% long from hedge funds and small banks that are constituted as non-commercials from the commitment of traders report posted by the CFTC once a week. And then we have for the pound pretty much the opposite. We have 68.5% short on the Great British Pound. This basically gives us a bit of a bias to be more short biased on the pound and more long bias on the dollar. And then if we take a look at retail sentiment, the crowd is tending to buy the pound right now. So we know that the pound dollar is a popular buy from the little traders, which tend to lose money. So we stack all these things. And again, this is how probability works for my trading styles. I stack all these things. I place a trade with a reasonable risk to reward, and I'm looking to try and capitalize on many iterations of the same sort of trading style over and over. Now I want to turn here before we continue on to more pairs. We had a question from Twitter from Winma Nuruddin. Hopefully I said your name correctly. I apologize if I did not. The question is, what is the current figure of inflation and what are the subsequent effects on the market? So let's speak about inflation a little bit, which I think is perfectly attuned to this week with CPI numbers coming out on Thursday from the United States. It's going to be reported at 8:30 a.m. US Eastern. If you're not familiar, usually that is the time that CPI numbers will come out. And let's pivot and take a look at that together. So if we go to tomorrow, which is Thursday's CPI numbers, the market is looking ahead to this big time. This is a really important metric coming out this month. And if we take a look at CPI, we are expecting year-over-year inflation to basically reach 8.1%. Previously, it was at 8.3%. The Federal Reserve is looking for this number to come down. They need this number to come down. Their whole point with interest rate hikes is to try and get in front of that inflation and to sort of stunt growth and stunt price rises a little bit in order to stabilize inflation. So if you are looking at the dollar, right? If inflation numbers come out higher than expected. And this is something that I think is really important. If we come out at, for example, 8.3%, likely what will happen is the dollar will actually go up, which sounds a little bit weird, but let me break it down in a really simple educational format, the best I possibly can. If if inflation numbers come out high, the Fed has a problem. They need to be more aggressive in order to combat that inflation. So think about it. Higher interest rates are more likely to come down the pipeline, which does what to the dollar? It raises it raises the value of the dollar, right? Because higher interest rates make the bonds of that country more attractive. It makes foreign investment more attractive, and it stunts growth, which makes recession fear even more likely, which causes the dollar to become more attractive as it is the safe haven currency of the world right now. So what about the flip side? What about if we came out at 8% or 7.9%? What would that do to the dollar and perhaps as well the equities markets and other key markets? Well, if 8% comes in, if we're actually on target or even better than our expectations from the Federal Reserve, that could cause the dollar to tumble as people say, okay, things are calming down and maybe I can take money out of the dollar and go towards the pound, go towards the stock market, go towards other assets, right? And so the market's key metric that it's focused on, I would say that this is your most important number for the week. This number will probably cause some major movements on dollar crosses, or equity charts like the US 30, right? The NAS 100. It will cause those charts to spike dramatically if there's any unexpected number here. Now, if it comes out as forecasted, it could probably just spike both ways and be relatively uninteresting. But that's kind of where we're at and why we need to focus on some of the dollar crosses prior to that. So I mentioned that if we get some spikes, overall, the story for dollar bullishness is still strong. And in my opinion, most dollar crosses, I'm going to continue to be bearish on other currencies, bullish on the dollar until something dramatically changes. Of course, I'm pretty flexible with my trading. I'm trying to be trend following and following along with what's sort of happening in the markets. So if something changes, you guys will know about it on Monday when we do our week ahead segment here at Eightcap. So let's continue. We'll take a look at some other charts here, specifically with the dollar, that might be interesting. So I want to talk a little bit about the dollar CAD. The dollar CAD has been trending beautifully to the upside, and I want to also look at it on the edge finder here for a moment with you guys. So the edge finder still pointing towards more bullishness overall for the dollar CAD. It's been bullish for several weeks now. And if we take a look at the commitment of traders data, we can kind of see some of the reason why. So we get two in this category. We get 77.7% long on the dollar, whereas only 61% are short, 61% are short on the CAD. So this points towards a little bit more bullishness continuing to the dollar side of things. And what you'll notice, you guys, just a side note, a little bit more, like I said, we're trying to focus educationally on this stuff, is that oftentimes with the commitment of traders data that we see here tracked in the edge finder, we can see on a consistent basis that very often when things are trending very well in one direction, hedge funds tend to be trying to ride that trend and making that money with them, right? Whereas on the retail side of things, usually what we see is the exact opposite. Retail traders tend to try and fight the great moves that occur in the markets and try and be on the other side of them. And when the market continues to trend and trend and trend, as it has on dollar CAD, this continues to be a really scary signal for trying to sell the dollar CAD ourselves. Now, again, we're going to have to wait to see what the numbers come out today with the federal, not the numbers, but from the meeting today with the Fed and the CPI numbers tomorrow. We'll have to continue to reevaluate things. But overall, the story has maintained a pretty strong narrative where the dollar, again, looks very, very strong relative to the Canadian dollar as well as others. And so if I'm looking at this, what are the setups? Well, we've sort of got resistance up top, right? So we've had this this point basically a couple different times where sellers have come in here and sold this market very strong. So there's two scenarios which I see could be interesting on the dollar CAD. Number one could be a pullback. So yes, maybe we top out here for a little bit and we find more sellers in the short term. If you get a retreat back down to like the 38.2, this looks pretty attractive for possible long scenarios. So let's talk about this a little bit. So we'll do maybe like just below the 50% retracement, and then looking for continuations above, right? Looking for that trend extension. We talked about this last Wednesday actually. Talked about trend following when it comes to riding trends. I think a dangerous, not dangerous, but a common idea is like, oh, well, I should just target the previous high and take my trade off there. But remember, as trend followers, if you're a trend follower like myself, what we're trying to do is we're not trying to call the top of the trend. We're trying to look for the extension, continuation of the trend. That's where the real money is, right? Not just the reaching the high, but that extension past that high that can oftentimes run for a lot longer. So for me, I like to trail stop. So, it would be an active management of a trade, but let's just say price comes down and gets us into a move here at the 38.2. We catch the move and price starts rallying back to the highs. At the point that we reach the highs, I may choose to lock in a little bit of profit, but ultimately the goal is to see if I can get a break above the highs, looking for continuation to trail stops further. Now, again, we'll have to follow up on that throughout the remainder of our month-long period here with the guest analyst role on Eightcap. And we'll do our best to follow up with those ideas. Now, I recently want to follow up also on one other cross, which is dollar Swiss. Okay, so dollar Swiss, you guys may know, if you remember from our previous sessions, that dollar Swiss was one of my my favorites to be long, and I actually was able to catch a good trade. I hope if you guys are watching the dollar that you were able to catch some of the dollar move recently, but my pick was the dollar Swiss. And what I noticed is that we broke out of the previous high. Now, if you remember, the buy trade occurred somewhere around here. And again, this was something that we called out on Monday. I talked about my trade back in this area here from last week. Held that all through Monday, all through Tuesday, until about middle of the day, evening yesterday, is when I ultimately got stopped out here for my profit. So what ended up happening is price rallied like crazy, continued, broke through the highs, and unfortunately did stop me out in this candle right around this area. What we actually ended up doing is, I'll show you guys this. So we entered here. So the buy trade was back here, right? Just going with the flow, again, trend following the dollar as we have been doing so far this month. Price shoots through the high, and at this point I go ahead and I trail my stop loss all the way up just behind market structure here. Now, of course, in hindsight, I'm looking a little foolish because price did bounce back a little bit, but here's the thing, right? You can beat yourself up endlessly about, I didn't get the perfect entry, I didn't get the exit, but we made money, and that's what matters, right? Is at the end of the day, did you execute your trade? Did you follow your rules? And did you make money in the end? Your rules might be different than mine. Your strategy approach may be different than mine because people see the markets differently. They have different tolerances for risk. They have different, times of the day that they can trade. Some people are in the UK. Some people are in, the Middle East. Some people are in the US, right? There's different times of day that you may be looking to trail stops or update your trades, etc. Anyways, I stopped out here for the profit of I would say, let me see if I can just give you a rough number. It was about 100 pips, which on dollar Swiss is pretty good. The question is this trade done? And I'm out of the way for Federal Reserve news numbers today. I have no trades open right now on my active Forex account. What I'm looking for though is possibly some pullbacks in the dollar throughout today's volatility. If we do poke back deeper into this retracement, now this area, which sounds weird, the area that I actually got stopped out in, I'd like to potentially re-enter. And if that comes into play today, I may be interested. So dollar Swiss, I'm still looking for an opportunity to try again, possibly catch some profit on this one again, perhaps on a continuation of this overall dollar strength. Again, just following the trend, managing risk accordingly, risking very small per trade. These are all of the core principles to profitable trading in my experience and opinion. So a little bit more of a pullback on the dollar Swiss would be interesting to me going into the remainder of this week. Of course, you have to be very cautious with news, and that's why I'll probably give my stop loss a good bit of distance, right? You have the CPI numbers, which could cause the market to go either way, right? You could get some volatility on that release. So I'll probably widen my stops a little bit there. For example, let's say dollar Swiss gets a little bit of a pullback here. I might still give myself some room here, right? Giving myself 40, 50 pips, something like that, to the downside in case there's some spikes or volatility on the news, right? You can get some pretty nasty candles on CPI numbers, especially if they are far from the expected values. And again, when talking about news, that's going to be your key indicator. Is how big is the spike going to be? Well, we don't know. Why? Because news, think about it, right? What makes you turn on your television to watch the news? It's not, they're putting out cookies at the local bakery that's going to get you to turn the news on. It's there's a massive fire at the local bakery, right? That's the sort of thing that gets you to react. And same things with markets, as of course we are looking at market participants to cause those volatile swings back and forth on the market. In terms of CPI numbers, if you're equivalent to, there's a building burning down, is far better or far worse than expected inflation numbers. If inflation is higher than expected, that's going to cause the stock market to probably drop and the dollar to rise. And on the flip side, the inverse side of the coin is, of course, if CPI numbers come out cooler than expected, we could perhaps see a little bit of relief on the dollar and some strength come back into the S&P. So there's a little bit of breakdown. Again, I don't have the future for you. I wish I did. If I had it, I would tell you guys, but I do not have the future of those numbers, but rather, and possibly just as important, we have a plan in place for how we react either ways. So let's talk a little bit about that here in our remaining few minutes. We'll talk about some plans for CPI that I personally have. So I'd like to also turn attention to perhaps the euro dollar, another cross that I'm interested in taking some positions in if we can get it. So you guys might have seen where I got smoked by euro dollar, and by smoked I just mean mentally. Money-wise, I lost a small amount of money shorting the euro dollar here. And the reason I say that I got smoked is because mentally this is exhausting, and truthfully, I think it's a good learning lesson here for us to talk about during my session with you this month. I hope that if there's one thing that you get out of, a couple key things that I hope you get out of my session here this month, is that trading is all about probabilities. There's no certainties. Drawdowns are a certainty. That's your one certainty, is that drawdowns and losing streaks are going to happen, and sometimes the market's going to do moves like this to you. The point of me acknowledging those things is that if you acknowledge it and you sort of accept the markets for what they are, they're hard to predict, they can do erratic things, and they're not simple, you're probably better off in the long term mentally handling some of the annoying things that happen as traders. So anyways, taking a look at the euro dollar specifically, let's talk about a plan here. If we break lower, meaning we get hot inflation numbers, like very high inflation numbers, and we actually break through the lows in the coming days here, if that happens, for me, what that would mean is simple breaks and retests, right? Looking for continuation plays on the euro dollar. So let's say we get, we'll do this. We'll do break, retest idea with continuations back down to lows and perhaps even beyond. If something like this happens, for me, the plan would be break, retest. Any opportunity to retest, sell into a point of structure would be of interest to me. Now let's approach the inverse. Let's say with the euro dollar, we get a spike back to the upside. What would cause that? Well, probably cooler than expected inflation numbers. I still think that despite, even if inflation looks a bit cooling, we still have plenty of rocky roads ahead in my view. And that remains sort of my fundamental bias. So if the euro dollar rallies, right, there might be an opportunity to actually pick it up short on a retest of structure. So both scenarios are short biased. So there's no trades here where I'll buy the euro if this happens, right? I'm just not there. I need to see higher lows, higher highs, price action to the upside, and the ECB more hawkish than expected, and the Federal Reserve more dovish, right? I need to see all those things before I even consider buying the euro dollar. For me, it's only short the euro dollar until something changes. So we have the two scenarios. We have scenario one, where we have hot inflation numbers that cause the euro dollar to fall apart underneath the lows, and then we look for possible retests. That's how I would approach scenario one. Scenario two is, of course, the opposite. Let's say we get a strong rally on the euro dollar. on cooler than expected inflation numbers. I would look for bulls to run their course a little bit, and then I'd be interested in perhaps trying to pick it up on the short side around 99.15 up into parity. So this sort of zone here could be an interesting point to look for sells, right? So that's how I would approach it. And again, we could tighten this up a little bit on if this sort of scenario happens. Of course, I'll update you guys on my thoughts on the euro. If actually, I'll definitely update you guys on the euro on Monday, as it is one of the more common things that I take a look at. So if price comes up into this area, that might be the chance for me to try and pick up the euro dollar short around the 99 mark. So there you go. That's kind of where I'm at with it. With the euro dollar cross around 99 up into the parity level, or 1.0000. So there you go. That's another plan or setup going into CPI numbers. My goal with these sessions is, I know you guys are probably in a similar way to myself. It can be a little bit annoying when you watch YouTube or social media people and they never actually give you tangible ideas. They never give you like straight up their opinions. I will throw my opinions out there all the time. I'll also promise you that sometimes I'm going to be wrong, but my goal is to give you more tangible, clear-cut ideas so that when you're looking at the markets, you actually know where I stand with it. Now, of course, I could be completely wrong, and I say that with everything that I share because I don't want you to get false impressions that I'm some sort of wizard that knows what the markets are going. My goal is to manage risk and take my trades that I'm supposed to take according to my strategy. And if that sounds rehearsed, it's because it is, because I've done this for so long. So it's just showing up and taking the trades. So I do like dollar Swiss long. I like euro dollar short. Pound dollar also looks like a short side opportunity. And perhaps one more that we should probably talk about is gold. So we'll take a quick look at XAU USD here today and talk about this one. So gold had some support levels that just broke apart right around the 1700 mark and caused a flush to the downside with a small attempt and then fell right back down to the lows. So watching gold, of course, this is going to be a hot market in preparation for CPI numbers as well as the Federal Reserve's meeting today. Gold, again, sort of in no man's land as we speak, kind of just sitting on a level of support. But if this level breaks, again, similar concepts to what we've been discussing. Breaks, retest, continuation ideas could be the play. Looking for that break of 1665, is that right? 1665, this area. If we get some structure breakouts to the downside, that could, of course, be interesting as well. For possible breaks and retests. And again, I like to give you tangible ideas, so let me do that for you. Breaks, retests, structure in terms of looking left, we do have this little pivot, right? So what we saw is that during the previous session, we had a bit of a rally on gold, but sellers came in hot right here. So we wouldn't want to see, or at least I wouldn't want to see, a break above the 1685 mark. That would be my point to say, okay, trade is no longer valid. And then again, the contingency here is I'm looking for, first of all, a break underneath, strong close underneath, retests, and then looking for continuations, perhaps back down to the previous low that we tagged around 1620, give or take. So we can tighten this up just in terms of a target. And there is your tangible idea. And again, there is purpose behind when I show you guys these trade ideas. My goal is to give you something to walk away with that you actually have. I don't know. I'm sure many of you guys have experienced this, but very often, you'll watch somebody and I feel like by the end of the session, I'm more confused than I began because they never actually put their opinions out there. They never actually, call a shot or give you an opinion. So that's sort of my thing. If you watch my content on YouTube or you continue to tune into these Eightcap webinars, that's what you're going to get. You're going to get a consistent, opinion piece from me. Now, of course, I can rant and I can go off on tangents and be completely wrong sometimes, but at least you'll get some genuine opinions stashed in there as well. Just a reminder, guys, as we close up the session here, if you haven't already, you could find me on YouTube if you subscribe to me. We've crossed over 300,000 subscribers recently, which has been fantastic. And I can just say honestly, if you've been with Eightcap for a while, you already know this, but Eightcap is a fantastic group of people and brokerage, and I'm glad that you are in the right spot and that they're, I think it's really cool that they're investing in their community like this because they've had me on for the month and they've been hosting some excellent traders. I know you guys had Boris for a little while as well. Definitely one of my favorite channels and people to watch as well. So I would encourage you guys to soak all this stuff up, right? Take notes, do all that you can, whether it's myself. Hopefully you get something out of my coaching webinars, but also you know, future guests, and you know, I'm sure that you can soak up a lot of knowledge from there. So there you go, guys. Thank you very much for tuning in to today's webinar. I hope that you got a lot out of this. Remember, we will be back on Monday to discuss more about trading setups and ideas that I'm looking at for next week, as things will continue to be volatile. I'm sure things have been wild the last really couple years, but we'll continue to cover it. And thank you guys very much for tuning in. Have a great rest of your day. Trade safe, and we will see you back on Monday.